edition of the London Session Open. Today is April 30th, 2019, and it's 9:35 a.m. in London when I'm recording this market update. We're going to take a look at the markets. The dollar is weakening quite significantly today, and in particular against the euro dollar. It looks like that breakout we saw just last week could be a false move. We'll find out later today, but the way things are looking right now, it looks a bit like a false move. So we're going to talk about that. Before we start though, as always, as you know, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. As well, don't forget to check out ATFX.com. We do offer more analysis there under the technical analysis section, and we also offer coaching and educational content on that site. So check that out. Just go to ATFX.com. Okay, good. So let's kick off. And this is the euro, and we're dealing with an ascending triangle now, and we are not that far away from that breakout candle, which is the April 24th high at 112.64. The market's right now at 26. The market's right now at 12.04. So we're about 20 pip away from taking out the high. And if we take out that high, then I would deem this breakout as false, and we will probably and unfortunately go back being pretty much of a range bound market, and it's not going to be too easy to actually trade this market at all. So I'm actually like hoping that it's not going to go trading much higher, just because otherwise we're just going to go back and being quite of a choppy environment as we had since pretty much June 2018. So it's like a whole year now of just rubbish trading and despair. If you're a trend follower than I am. But there's other stuff working out good or looking quite interesting. Yesterday, if you check out our YouTube page, I talk about the Russell 2000 that had a nice little breakout. Hopefully we can get some follow through on that. Stock markets in general last year, at least for me, were those were the markets that actually delivered my profits. At the end, after trading currencies last year, they delivered like 1.5% out of my 40% return in 2018. So for now, again, I'm just gonna stick to this view, and obviously should really reverse here. Fib from high to low tells us that we're at the third fib. So if this is gonna reverse, it should really reverse now. If not, again, we could go a little bit higher, and then this is just gonna turn into some sideways market, and there's not too much to do at that point. Similar with the GBP versus the USD. So the market was in this ascending triangle, and if it takes out this high, it's not necessarily gonna rally to 133, because then I would have bought myself. It might just go from 130, then goes a little bit lower, and then goes a little bit higher, and then sort of tries to figure out what it's gonna do. And obviously, if you look at it from a big picture perspective, if you take data into account from December 12th, then yeah, maybe we're gonna start to trade upwards. But again, it's not gonna be an explosive move unless something happened with Brexit, which we all know is not gonna happen anytime soon. And this is the dollar versus the Japanese yen. Continues to be sort of look like a head and shoulders. This market though did it triggered an initial head and shoulders here on April 12th, did not work out. And then on April 24th, it tried again, did not work out. And continues to be bullish for now at least, because if you look at it from this perspective, we're still dealing with a little uptrend. So people that like to buy dips, they're probably buying dips pretty much where we are, and they're saying, okay, we're dealing with an uptrend. We're gonna risk 60 pip. If we go upwards, we make maybe 225 pip. If we're just looking to scalp, we're just gonna target these highs. So if you just target the highs, at least you get more than a 1-to-1. If one would keep the position for a few weeks, then you can get a 3.78. So I think that's really what people are looking at here. That's one option, and I will remain bullish above this low. And if we take this low out, we're probably going to trade a little bit lower. So it's pretty much like this right now. The alternative is like this. What else? Gold prices. It's still sort of guided lower, but by this series of lower and lower highs and this massive head and shoulders. It's a bear market, and the market went so close to touching that breakout candle but failed. So this is really what the euro is here today, about to touch that trend defining level, and you can see the market is still lingering around the same level. So it may, it may just take out that level and go maybe to 1,300 or so. So I wouldn't be too enthusiastic about being short here, but the trend is bearish below 1288. I would rather just wait, give this a few more days, and try to, maybe with a smaller chart, try to figure out. For example, if you look at the 1 hour chart, you could argue that maybe it's just trying to create the right shoulder of a mini head and shoulders. You have yourself a head, left, and right shoulder, and a break to the lows, which looks to be yesterday's low. Yeah, yesterday's low could potentially be the beginning of a slide. So you're looking for something like that, the short-term trend aligning itself with the big picture. That's what I would do instead of just shorting blindly. Crude oil prices are going upwards. On CNBC, I think Donald Trump said on Friday that he thinks OPEC should do something about the high crude oil prices. And the market tumbled, as you can see, took out the short-term trend defining level, and now the market is just trying to figure out if that was just a one-off move. So it could go all the way back up again, but I'm thinking probably back to the middle. And then the way I'm gonna do is I like to be defensive in this case. I like to have sort of figure out, sort of say, oh, we're gonna be, can we go long on a breakout or go sell on a decline? That's what I prefer. Like here, for example, we had a nice little rectangle. We talked about selling here, and I think here as well. We had a ton of these actually over the last few months. So same situation here. Let the market figure out what it wants to do. Let it settle. Ideally, it goes up and down and sort of goes in the middle. So it takes some time here before we go up or before we go down. Not Russell 2000, but the S&P 500. So S&P 500, we talked about buying here a few days ago. Sorry, let me. My memory is so bad now. We talked about buying down here. I think buying was here, and then we missed out on that pullback. But that's fine because we said look to buy here, look to profit here and here, and then the market moved lower. And I don't think we actually touched the actual buy zone. What I've done here though is that I pushed up the levels up to here, and the new trend funding level is 12 or 2910.6. If it goes down, I think people are gonna be buying. And what you want to do, that's interesting by all means. Like the S&P 500 and even the Nasdaq. The Nasdaq had a nice little level, so you can look at that. But where I think is the most interesting is here in the Russell 2000. So I did a video on this yesterday, and as you can see here, it's a massive head and shoulders, left, right shoulder, and that head, and then you have the break. And the different ways of dealing with the stop, as I talk about here, either just below yesterday's low, alternatively below the low from, I think this should be the low from Friday. But it looks like here, small stocks are going to catch up. Which again, it doesn't look that weird. It's not such a bad idea. Why? Because inflation is not too high. So the Federal Reserve is probably not going to raise interest rates again, but they're not going to cut rates. Number two, just a few months ago, people were so afraid of markets and we're going to have a recession and whatnot. The world is going to go under. You need to, get yourself a shelter somewhere. At least if you on Twitter. But now we're not there. GDP is at 3.2%, and people sort of try to figure out, what's going on. Well, this is going on. The economy is good. Stock markets are at all-time high. Small stocks, of course, are trying to catch up. Is it gonna work out? Obviously, I have no clue about that, but the technical analysis is telling me that this whole thing can rally about 20%. And what I do know is that from risk-reward ratio setup, you know, depending where you put your stop loss, either below yesterday's slow or maybe just below Friday's low, the numbers look good. And it's the numbers that are important, because at the end of the day, no one knows exactly what's going to happen in the future. And it's just like a numbers game, like a casino, right? A casino, when you go to the casino, they have set up the rules that they know that in the long run they're gonna make a profit. Yeah, of course, once in a while they need to pay out that jackpot with a few million, but they are gonna make money in the long run. To give you an idea, a simple lottery ticket, the ones we have here in Europe, like the Euro Millions, there's more people buying tickets that they are paying out. Okay, so even if they need to pay out that big jackpot, they sold more tickets than they're paying out. Maybe not for every single week or every week, whatever it is. I think it's every week. But for sort of, say maybe the quarter, the year, or something like that. Probably even the month, really. And it's the same thing, you know, like roulette. You got two colors, right? But what have they done? They removed one or two extra colors. So you don't have a 50-50 chance. You have that 48 or 45% likelihood of getting it right and a 55% likelihood of getting it wrong. And then, you know, they play that game 100 times and then they make that little edge, and that's how they make their money. And it's the same thing here with my trading. When I look at the markets, I try to look at it from a rational perspective, which is obviously not that easy because we're all humans, right? But you try to look at it from a rational perspective, and then you just play what's being dealt. Now, a bit like poker, you don't always have to play that hand. You can fold, and you know, there are occasions where I don't trade too much. And in the case of currency markets, you know, there hasn't been too many good opportunities over the last few years, or for the last year. Sorry, year. That's what I think, at least. And I know it's not fair across the whole world. I know for all my American friends that are watching, it's much more difficult to trade, like the Russell 2000 or crude oil or, you know, copper or platinum and gasol and all of that. You need to have an exchange account with the exchanges, and the margins to open up positions is like quite high compared with forex trading. But for example, if you happen to be in Australia or Europe or any place where it's not the US in this case, where you can trade CFDs, then there's nothing that says that we have to trade um, forex all the time, especially not when the markets are starting to get choppy the way they are right now. Okay, let's see if you guys have any questions. I didn't write it myself. Good morning. I'm gonna do it now. So I hope you guys doing well. And if you have any questions, just put them in the chat box. As well, don't forget to like the video and also to share it. Again, dollar doing quite badly today. Very close of turning neutral again in the Euro USD. Hopefully it doesn't, just for the sake of having some good trends and the possibility to make money. When it goes like this, well, you can hear my voice, the disappointment in the euro. Okay, guys, I think we're going to wrap things up if you don't have any questions. If you are looking to trade and you are trading, you sort of contemplating, you have issues with your broker, security is paramount. You got ATFX being regulated by the FCA, which is good. You have as well all those markets. You have, for example, Apple and Facebook and Alphabet, or Google, and these companies as well. You can trade a bunch of different markets. The main difference here, though, is that they're much, much cheaper than most, but without the drawdown in the services. It's not that you know, it's just a cheap product and then, you know, we just don't give you any hand. In fact, what we're doing differently here with ATFX is that we're actually offering more support. So people that open up an accounts with ATFX with a minimum £5,000 or 5,000 euros or $5,000, they get one-to-one coaching by me, and I've been trading since 2006. So I'll bet you whatever system you're using right now, I have some sort of input and I could potentially help you with that. If you don't have a system, I can probably help you sort of figure out. For example, what I have done in the past is I had one gentleman, he knew where to enter, but he didn't really knew exactly order to take profits. So I explained two different ways of doing that, and we did that like in a 30-40 minute Skype interaction meeting, and then but what we do here is that we do 30 minutes, and then we do a follow-up maybe a week or 2 weeks later. So that's something we do. As well, we have a premium course coming up, which should be done in the next 2-3 weeks. And that as well is something that all clients are going to get independently of account size, at least right now, as ATFX an up-and-coming broker. So I got a question here. What was my take on the GDP at 10 a.m.? What will this affect the markets today? 10 a.m. Let me check here. You said it's 10 a.m. today. 10 a.m. I don't. Let me see here. Today's Tuesday. Oh, you mean European GDP? Yeah, European GDP. European data in general has very little, if no impact on the markets. Obviously, if the number is higher than 1.1, you might see the euro gaining a bit, especially as people, talked about the German economic situation and worries about the economic slowdown. So if it's higher than 1.1, it might give the euro a bit of a boost. But you're looking realistically at maybe 10, 15 pip, and then that's it, unless the number is like very, very good. You can see how the annual growth in January 2018 was at 2.7%, and since then it's gone lower and lower and lower. So if it's slightly better, it might boost the euro a bit. If it's slightly less, it might sort of cause the euro dollar to go down with 15 pip or so. As for the data that tends to matter for the GBP or for the Eurozone, it would usually be inflation figures and maybe unemployment. You have German IFO and German CFD index. Now, the way it works though is that it's not like US data that it moves the market immediately. Rather, it's people saying, okay, they have some little notepad or something, and they're like, okay, that number was bad, that number was good, that number was bad. Overall, okay, that's a sell, okay? And then they wait for the technicals to take that decision. Many times, well, not many times, I traded maybe a few times, when you have like the CFD index, which is the leading economic indicator, and then it's like, oh, it's good or it's bad, the euro moves 20 pip, but then it sort of reverses. So the numbers are important, and then people wait for the right opportunity to act on the numbers. And a lot of people as well, it's this a bit of a delay reaction function, where they look at all the numbers, and then what they do is that they will wait for the ECB announcement. So they wait for that day to maybe take a position. That's the way I would look at it. In the case of US, it's more direct. Okay, numbers are out in a few minutes, so we'll see what happens exactly. Guys, thanks so much for watching, and don't forget to like the video and share it. The more you share, the more you care. We're doing quite good with the numbers and people watching, so thanks so much for your support, and I'll see you guys tomorrow. Thank you. Bye-bye.